Hello everyone, this is Sun Chang, the Korean bro. Today is 2022, July 25th. Uh, let's look at articles, okay? The one that I'm going to see first is let's see, how to find and determine which stocks are worth holding through a bear market. Big lots. Hmm, Big lot stock is a value play at these levels. Big lots. Snowflake stock may have stopped falling. Um, Zimbabwe debuts gold coins as legal tender to stem inflation. Hmm. TripAdvisor stock might be ready for a ride. Asian shares start with lower, tracking Wall Street retreat. Consumer confidence Fed policy statement Amazon earns. Hmm. A TripAdvisor stock might be ready for a ride. Does a closer look at Nvidia stock reveal long-term weakness? Hmm. Three watchlist stocks to capitalize on sector rotation. Monthly dividend stocks can provide solid income. Use high beta stocks to maximize your investing profits. Let's look at these first, okay? How to find and determine which stocks are worth holding through a bear market. Hmm. Mm, hmm. Oh, let's see. Hmm. Bear market can trigger panic to a point where investors literally throw the baby out with the bathwater. Bear markets always recover. The question is from what point and when. The question is from what point and when. Hmm. Hmm. A bear market incites fear and capitulation on the way down, and regret and fear of missing out on the way up. While professional money managers push the stay the course mentality, the reality is that not all stocks are worth holding through a bear market. Many stocks will collapse and never recover. Bear markets are times to reassess which stocks are worth holding through the course of a bear market for recovery afterwards. It's also a time to go shopping for promising stocks that may have been too expensive during the bull market. Here's how to determine which stocks are worth holding through bear market. The focus is on determining which stocks will participate in the recovery after the bear market passes. The S&P 500 and benchmark indexes have not only recovered but surpassed prior highs from every bear market. However, keep in mind the benchmark indexes always get adjusted to kick out losing stocks and add winning stocks. Therefore, don't assume your stocks will all recover based on the benchmark indexes. The best of breed stocks in the S&P 500 index are the most likely to lead the recovery. Always look for quality stocks with fortress balance sheets, relevant trends, leadership positions in the industry, and liquidity. Value stocks. A bear market can be relentless, and panic can crash stocks below their intrinsic value levels. The most basic valuation is the cash per share. Stocks trading at or below the CPS levels can be considered a value place. If a stock is trading below its CPS, then technically the business is free. Keep in mind there may also be fundamental reasons for the weak valuations. So be sure these are not the anchor. Secular trend stocks, turnaround, beaten up speculation stocks. Mm. PST, the chart analysis at entry levels. Mm. Mm. Big Lots stock is a value play at these levels. Home discount retailer Big Lots stock has tanked in 2022. Low consumer confidence and declining spending took a toll on the discount home furnishings retailer. The company was a benefactor during the pandemic, as consumers spent buoyantly on home improvement items. However, the reopening and macroeconomic conditions have led to a dramatic slowdown. Mm. Ocean labor inflation, logistics, and supply chain disruption were some of the headwinds that did a number of its fiscal quarter first 2022 results. Broad inflation and rising gas prices started to impact consumer discretionary income levels starting in April. The COVID lockdowns in China worsened its supply chains issues as it procures a large amount of merchandise from there. On March 15, 2022, Big Lots received a letter from activist investor and 5% owner Miro Capital, um, insist on pursuing a sales process to maximize the present value of $55 to $70 per shares. The company continues to grow its private label brands, Broyhill and Real Living, and expects to open over 500 units in their next 5 years. Hmm. The softening consumer demand has left the company over inventoried, with starting prices too high. Mm. The CEO assures this will be rectified, which should help produce a second half improvement. While Target and Walmart also reported the unexpected drop in consumer spending, mm, Big Lots has deep experience in closeout and discounting, which will help it keep steady moving forward. Prudent investors looking for exposure in the discount home furnishing segment at a value can watch for opportunities to take pullbacks in share of Big Lots. Okay, here it goes. Big Lots once had a good time. Mm. There were times where they sold a lot of goods. Uh, During COVID, people went into Big Lots and bought a lot of home improvement merchandise. But as the time goes on, as the time went on, things got worse because of supply chain issues, high inflation, labor inflation, logistics, stuff like that went on and on and on, and like demand has gotten softened. It's not only a Target but also a Walmart also suffer from this incident. And here in the article it says you can have a good opportunity by grabbing this one at pullback level. Big Lots. Let's see its price first and see if it has real value. Okay, Yahoo Finance. Um, I'm going to Big Lots. Yeah, there you go. It's now current price is 21.43. All time high was 60.94. Uh, I don't know about that. Snowflake. Let's look at Snowflake. Okay. Uh, Data cloud provider Snowflake stock has tanked on year. The enterprise data warehouse systems provider enables analytics and reporting to generate business intelligence. The company is thriving despite macroeconomic conditions. The CEO has stated that larger headwinds like inflation and supply chain disruptions warrant the need for Snowflake solutions. Its data cloud enables clients to consolidate all data into a single source of truth, utilizing it's a data cloud enables clients to consolidate all data into a single source of truth, utilizing artificial intelligence to deliver business insights, improve efficiencies, and build data driven applications. While growth has slowed from triple digit percentage, the company is growing its top line at 84%. Its remaining performance obligations rose 82% to $2.6 billion, and that rate hit is 174%. The differentiation with Snowflake is its data cellular solution through warehouse as a service to enable machine learning and data science workloads and full scale mobilization of data for predictive analytics like a C3 AI. The company has grown its Snowflake partners network by 48% quarter over quarter, growth to over 425. Snowflake has over $505 billion in cash and no debt. One of its pharmaceutical clients has estimated that Snowflake will improve their time to market for a new drug by 3 years. Prudent investors looking for exposure in best in class enterprise data warehouse solutions can watch for opportunities to pull back in shares of Snowflake. Let's look at Snowflake, okay? Snowflake. Hmm. Here it says two remarkable growth stocks that could turn $1,000 into $5,000 put by 2030. Two oversold tech stocks by hand or feast. Tech sector bear mark 5 growth stocks down more than 50% that you will regret not buying on the deep. Two stocks that could grow sales 100% in 2 years, according to Wall Street. The S&P 500 growth index has outperformed the broader market over the long term. Snowflake should benefit as businesses look to unlock value in big data. Uh, Octa should benefit as organizations continue to prioritize cybersecurity. Snowflake's growth-heavy portfolios have taken a hit this year. The S&P 500 growth index has fallen 27% from its high, putting the index deep in bear market territory. Even so, the index is still outperformed the broader S&P 500 over the past 3, 5, and 10 years. The data makes a compelling case for owning at least a few growth stocks. Building on that idea, a $1,000 investment split evenly between Snowflake and Octa today could grow fivefold to $5,000 put by 2030. So here it goes. Octa, we have Octa and Snowflake. Okay. Snowflake specializes in big data. Its cloud platform enables customers to capture, store, analyze data without the complexity of managing the underlying infrastructure. Snowflake also supports more sophisticated workloads like preparing data for artificial intelligence, building data driven applications, and securely sharing data with employees and partners. That broad functionality distinguishes Snowflake from many vendors. And its infrastructure agnostic platform, meaning it runs across all three major public clouds, sets it apart from companies like Amazon and Microsoft, which tend to push customers toward their own cloud services. Their value proposition has Snowflake growing like wildfire. Hmm. Over the past years, the company saw its customer count rise 40%, and the average customer spent 74% more. The jaw dropping figure means the business are expanding usage at a remarkable pace, underscoring the value Snowflake creates for customers. During that time period, revenue skyrocketed 98% to $1.4 billion, and the company delivered positive free cash flow of $227 million, up from a loss of $75 million in the prior year. Investors should expect the momentum to continue. Businesses that can harness the power of data stand to gain an advantage over their peers. such as better AI, better cybersecurity, or better marketing. On that note, Snowflake recently introduced data marketplace monetization in public preview, allowing customers to publish and sell data sets through the platform. Looking ahead, the company estimates addressable market will reach $248 billion by 2026. And management is guiding for $10 billion in product revenue by fiscal 2029. That implies a compound annual growth rate of roughly 34% between now and then. Currently, Snowflake has a market cap that will be much cheaper than the current multiple of 32 times sales. That's why this monster growth stock could be a rewarding long-term investment. Octa specializes in identity and access management. Its platform helps businesses secure their sensitive data and software by enforcing access policies based on context like device, location, and time of day. Octa. The system learns the behavior of each user. For instance, the device typically used to access an application, and it leans on AI to score the risk associated with each sign, attempt, and authenticate users. Okta has distinguished itself in several ways. Its platform features 7,000 pre-built integrations that accelerate adoption, and those integrations are especially relevant to workforce-facing technologies like Microsoft Office 365. The company also acquired Auth0 last year, enhancing its suite of developer tools. Those tools allow organizations to embed identity into custom applications, which is particularly relevant to customer-facing technologies. In short, Okta ensures that only the right people can connect to the right technologies at the right time. And its platform addresses both workforce and customer IAM. That broad functionality has resulted in strong demand. Okta grew its customer base 48% over the past year, and the average customer spent 23% more. Better yet, Forrester Research recently named Okta the industry leader, citing a stronger current offering and a stronger growth strategy than any other vendor. That recognition came alongside strong financial results. Okay, there we have Okta and Snowflake. Okay. Two oversold tech stocks to buy hand or fist. Beaten down tech stocks are worth considering during the market sell-off. Growing demand for memory and storage chips should boost demand for micro technology for many years. Micro technology, Snowflake. Okay. Micro technology. Okay, let's look at micro technology for the last time. Okay, micro technology. Why ASML isn't seeing the slowdown other semiconductors are? Hmm. Here's why ASML and perhaps other equipments, several chip makers have reported sharply slowing demand, especially in consumer electronics. However, ASML's earnings report showed unwavering strength in new orders. Uh, Here's why semiconductor demand could be slowing, but equipment investment continues. It's good to have a monopoly on the most important technology in the world. The near term outlook doesn't look so good for semiconductors. Look no further than the recent tepid guidance from memory producer Micron and hard disk storage provider Seagate Technology as an evidence. First, there is a hangover from the pandemic era boom in PCs and smartphones, with consumers now spending money on travel experiences. High gas, rent, and food inflation are also conspiring to take away the consumer's purchasing power, and China's lockdowns have depressed demand even further. With the Federal Reserve raising rates and several measures of economic activity going into contraction, it's no surprise companies may be cutting back on investments and inventory when they can. That has the potential to even hurt the stronger data center and industrial markets, though we haven't seen those slows yet. Yet, in contrast to other cheap companies, a leading semiconductor equipment company, ASML, isn't seeing a slowdown in its business. Quite the opposite. Here's why ASML and perhaps other equipment stocks may be able to defy the semi slump is less cyclical than other semis. While Micro and Seagate produce different kinds of storage media, or which are somewhat commodity-like, ASML makes key machines that help produce all kinds of chips. Furthermore, ASML is the only company to make extreme ultraviolet lithography machines, a proprietary technology needed in order to produce the most advanced leading-edge logic and DRAM memory nodes. But if the need for chips is slowing down and we're headed to recession, wouldn't there be decreasing orders for ASML machines? If a recession is very deep and painful enough, it's possible. But ongoing digital transformation is a long-term structural growth trend with more semiconductor content per server, car phone, and computer with each passing year. Thus, even if iPhones or PC units are down for the year, those vendors are still going to want the most powerful, energy efficient processors in their new devices. Therefore, there will still most likely be perpetual investment in leading edge nodes and therefore EUV. On its recent earnings call, ASML CEO Peter Wimple pointed out that there are 8 new leading edge fabs currently under construction before the end of next year. All of those fabs obviously needed lots of EUV tools since they will be for leading edge production as well as ASML's DUV tools and others. Since the production of leading edge nodes is growing more capital and time intensive, these are more long term strategic investments. Wingman elaborated. Mm. So it's mainly this article is about how ASML is worth considering investments because although near in the short term semiconductor industry doesn't look so good in the long term uh, its technology uh, is critical and like the technology and technical skill that they have is it's outstanding. No other competitors can compete against this one. They got something that the others don't have. So like they so here it says term monopoly. Monopoly. Yeah. It's good to have a monopoly on the most important technology in the world. It's good to have a monopoly on the most important technology in the world. So, okay. Hmm. So that's the reason why, unlike other companies out there, ASML isn't seeing that much slowdown compared to other investors, other compared to other semiconductor companies. Isn't that seeing that much slowdown? Okay, Snowflake may have stopped falling, and Zimbabwe debuts gold coins as legal tender to stay inflation. Zimbabwe has launched gold coins to be sold to the public in a bid to tame runaway inflation that has further eroded the country's unstable currency. So, Zimbabwe officially allow people to use gold as a coin. Here's what it says, right? The unprecedented move was announced Monday by the country's central bank, the Reserve Bank of Zimbabwe, to boost confidence in the local currency. Trust in Zimbabwe's currency is low after people saw their savings wiped out by hyperinflation in 2008, which reached of I believe percent according to the IMF. With strong memories of that disastrous inflation, many Zimbabweans today prefer to scramble on the legal market for scarce US dollars to keep at home as savings or for daily transactions. TripAdvisor stock might be ready for a ride. Online travel company TripAdvisor stock has fallen 35% this year. The travel sector was devastated by the pandemic as an epicenter industry. TripAdvisor. Well, in the short term, it may have a great potential upward. Mm, it has great upward potential, but in the long term, I wouldn't spend much money on investing because it's not as mm, it doesn't look like it has as much potential as other companies. Wait, let's keep on reading and see what this article says. However, the reopening has unleashed much pent-up demand, with many carriers like American Airlines experiencing travel return back to pre-COVID levels. However, the popular travel saw its share peak at $64.95 on March 15, 2002, and continued to slide towards its pandemic lows. Peers like Expedia and Booking Holdings are bottoming out, which may also be a sign for TripAdvisor shares to reverse course back up. Airbnb stock has also attempted to put in a bottom. Travel and tourism is expected to surpass pre-pandemic levels by 6% in 2022, generating nearing $2 trillion. China losing COVID the quarantine restrictions helped to put a bottom in on travel stock. Okay, China has also helped them. Mm, China also took a role in helping other companies to have good revenue because it also stopped doing restriction thing. Um, TripAdvisor, consumer confidence, Fed policy statement, Amazon earns. Look at some of the key business events and economic indicators upcoming this week. Hmm. Might be ready for a ride. Okay. Does a closer look at Nvidia stock reveal a long-term weakness? I don't think so, so I'll just skip on this one. Do you watch the stocks to capitalize on sector rotation? Hmm. Okay, let's go to Yahoo Finance. Okay. Stock futures rise ahead of Fed earnings. The Fed has no choice but to punch the stock market. Investors prepare for the business week of the year. That's why the stock market has defied the odds in July. Uh, Cybersecurity stocks to buy and watch. Will cloud companies outperform? Buy these two stocks before they jump over 40%, says Goldman Sachs. Major crash to come. Robert Kiyosaki warns that the key economic signal is flashing bright red. Three assets he likes for shot. Oh, some are e-commerce stocks ready for combat. Analysts offer three beaten down names with big upside potential. Uh, Bearish battery stocks you should think about shorting this week. Apple Apple, Visa, and Microsoft ExxonMobil, Chipotle, and other stocks watch this week. Giant manager buys up Apple, Nvidia, Corning, and Pfizer stock, Apple, Amazon, Microsoft, Google, and AT&T is about right now. The upper middle class is getting squeezed. Yeah. The Fed has no choice but to punish the stock market. Billionaire Mark Cuban says he suffered losses. U.S. stocks poised for lower open on Monday. Kathy Wood says we're already in a recession. Check these telltale signs and decide for yourself. Earnings season is about to kick off for chip stocks. What do you expect? Amazon stock has gotten crushed. There's a case it could double or even triple from here. Hmm. Tesla wasn't a Monday fortress after all. What it means for its stock and its bonds. Is the stock market going up? It might depend on the definition of recession. Bitcoin falls. Cryptos could be in for a bumpy week. Intel lends Taiwan's media and tech as client for its foundry services business. Hmm. Here are some smart ways to hedge against high inflation. Is Chevron stock right now? Here's what earnings chart shows. Fintech stocks to buy or sell as payment stocks lag S&P 500. 6 tips for surviving a bear market. Okay. Okay, this is it. Okay, let's briefly read every articles. Okay. Okay. Stock futures were higher Monday as investors braced for the busiest week of the year, full of corporate earnings and economic data. Um, the Fed has no choice but to punish the stock market. Um, it cost me $58 to get my car cloned on Saturday. And before you pummel me on Twitter, no, this did not include a hand wax and a voucher for a free appetizer at the local steakhouse. This was just a straight wash with a shine up of the internal and tea. As I drove away, I laughed knowing that the experience was going in the morning brief newsletter. Hmm. Why the stock markets defy the odds in July? Investors have breathed a sigh of relief up to this point in July as worst case scenarios for the economy have failed to materialize. Nasdaq Composite and S&P 500 are up an impressive 7.5%, respectively. So far this month, shares of meme stock darlings, GameStop and AMC have jumped 17%, 14.5%, respectively. As the traders embrace the risk-on backdrop, even 2022 laggard Netflix has seen its stock rise 25% month to date, even after another lackluster earnings report on July 19. Will cloud companies platform outperform? You may think the time is right to move into cybersecurity stocks as geopolitical events unfold and acquisitions continue. The IBD Computer Software Security Group mm, ranks number 59 out of 197 industry groups tracked. Uh, However, we do not put firewall solutions in the same bucket and believe the last 3-year deployment cycle could drive more subdued spending behavior. Hmm. Next, buy these two stocks before J jump over to key economic signals flashing bright red. Here are three assets like for shock safety: gold, silver, Bitcoin. Soaring inflation, rising interest rate, and slowing U.S. housing market continue to send nervous vibes across the stock market. Hmm. Rich Dad Poor Dad author Robert Kiyosaki says that the real problem is what's happening in the bond market. On Friday, government bond prices soared around the world as soft economic data out of the U.S. and Europe fueled worries over slowing global growth. Generally speaking, investors view government bonds as safe havens during periods of economic stress. Once considered a niche as Bitcoin has now entered the mainstream, but it has lost plenty of its allure, having fallen a whopping 53% in 2022. Contrary investors might want to take a closer look, though. You can purchase Bitcoin directly, but if you don't like that kind of volatility, you can also invest in companies that have tied themselves to the crypto market. In October, for example, PayPal launched a service in the US that allows users to buy and sell and hold cryptocurrencies. They introduced a similar product for the UK in late August. Hmm. Are e-commerce stocks ready for a comeback? Analysts offer three beaten down names with big upside potential. Farfetch. First on our list today is Farfetch, the online luxury fashion goods retailer. The company's e-commerce platform operates to connect creators, curators, and consumers of luxury fashion items, from jewelry to high-end shoes to accessories to clothing for men and women. Farfetch has its home base in Portugal and operates out of offices in major global centers: London, New York, LA, Tokyo, and Shanghai. Farfetch's shares are down 75% so far in 2022. Farfetch. Mhm. Farfetch shares are down 75% so far in 2022, with most of the losses coming earlier in the year. The company's quarter first financial report was a mixed bag, but providing a relatively bright spot amid 2022's difficulties. Hmm. Mercado Libre, next on our list, Mercado Libre is a leader in the Latin American online retail sector. Region south of the border tends to get overshadowed by its giant neighbor, perhaps unfairly, as Latin America has a total population exceeding 665 million, a collective GDP of $5.3 trillion. It's a major supplier of petroleum, iron ore, copper, and agriculture products. Mercado Libre. Mercado Libre. Mercado Libre. Hmm. Farfetch. Hmm. Sergey Brin ordered sale of much investment after affair. Google co-founder Sergey Brin instructed his advisors to sell his personal investments in Elon Musk companies in recent months after learning that he had a brief affair with his wife. Wow, wow, wow. Instructed his advisors to sell his personal investment. Musk, the co-founder of Tesla, had an alleged liaison in early December in Miami when Nicole Shanahan, the journalist, citing unidentified people familiar with the matter. They ended the long friendship between Musk, 51, and Brin, who helped support the electric car maker during the 2008 financial crisis. Brin, 48, filed for divorce from Shanahan in January. The upper middle class is getting squeezed. Hmm, hmm. Okay, here it goes. Mark Yu had a profitable pandemic. Like many Americans, he had Twitter savings and pulled in big gains from the stock market rally. He purchased a house in his new hometown of McAllen, Texas, then a duplex, an 8-unit apartment complex in Cleveland. But 2022 hasn't been so kind. His expenses have grown because of higher costs for gas, groceries, and dog food for his four German Shepherds. um, the value of his stock holdings is shrinking. He's sending more money back to his family in the Philippines to help them cope with rising prices there. A cracked foundation, his new house cost tens of thousands of dollars to repair. Mr. Yu, 33-year-old who has lived in the US since 2014, is now taking on credit card debt and typically working 7 days a week. Previously, he was choking away as much $3,000 a month into a brokerage account. This year, a couple hundred is the though she had been able to muster and hasn't put anything in for the past 3 months. His story is similar to that of a number of upper middle class Americans who are seeing their 2 years of pandemic gains eroded. Hmm. Well, like upper middle class in Korea, like upper middle class in America, also suffer from rising inflation, supply chain issues, and economic crisis, recession, and stuff like that. People still suffer. It's not only Korea, but also in America, people suffer. Okay. Mm. Kathy Wood says we're already in a recession. Check these telltale signs and decide for yourself. It may look, feel, and coast like recession, but is it really a recession? Despite rising inflation and ebbing financial confidence, the current economic conditions don't yet meet the technical standard of a recession. But that hasn't stopped many economists and business leaders from calling it one. Take Kathy Wood, the prominent U.S. investor and founder of Art Invest, who has joined the course of financial experts weighing in. We think we're in a recession, Wood said in a recent CNBC interview. We think a big problem out there is inventories, the increase of which I've never seen this large in my career. I've been around for 45 years. Whether Wood is right or not, American households should watch for more telltale signs of trouble and make few savvy moves to ensure the finances stay solid. Power of positive thinking. Managing these tough times. Amazon stock has gotten crushed. There's a case it could double or even triple from here. Amazon.com has reported earnings about 100 times since it went public in 1997. Every one of those quarterly reports has shown a growing company despite plenty of ups and downs in the economy and the internet. Amazon's worst quarter came in September 2001 when the internet bubble was blowing apart. Even then, revenue grew slightly from a year earlier. Now, though, Amazon's streak may be coming to an end. When Amazon reports second quarter earnings on July 28, Wall Street analysts expected revenue growth of just 5%. That's a top number by Amazon standards, and if things are just slightly worse than expected, revenue could actually decline. It would be a telling moment with Amazon facing its greatest set of challenges since founder Jeff Bezos began selling bullshit out of his house almost 30 years ago. Builder Mark Cuban warns of a powerful player. The regulator has announced that nine cryptocurrencies listed on the Coinbase exchange, the most popular platform in the United States, are unregistered securities. A security is, according to SEC, an investment of money in common enterprise with a reasonable expectation of profit derived from the efforts of others. The announcement came as the SEC and the Department of Justice filed charges against former Coinbase product manager Ishan White and two others, accusing them of running an insider trading scheme that earned them more than $1.1 million. Everyone thinks that this is the best stock to own. Let's see what they are. I cannot read it unless I subscribe it. Okay. 6 tips for surviving a bear market. If you are new to the stock market, you probably had a rude awakening. The value of your investments has declined the past few months. While that may be worse, don't panic. A bear market defines as a stock market decline of 20% or more occurs from time to time. Stocks typically slide into a bear market when investors worry that economic conditions will slow. Studying companies' earnings growth. Recession fears have been elevated since the start of the year. When the Federal Reserve indicated it would get serious about raising interest rates to curb soaring inflation. Softer growth stocks to buy and watch as sector lags S&P 500. This is the one that I'm going to read for last time, and then oops, too bad I cannot read it unless I subscribe it. Okay. Since today is the day that I get my monthly income, I'll have to choose among the companies listed on my portfolio. I'll have to go there and check some of things. I'm not going to do it while I'm doing YouTube. Uh, I'll just see it myself and decide. I'll tell you what I pick tomorrow or the day after tomorrow once I choose. Once I choose, okay. Uh, I'll probably spend like 2/3 of my income. We'll see. Uh, hmm. I listed some of companies that I really want to invest. It's Octa, Snowflake, Market Libre, Farfetch. They're the ones that I read about tonight. But still, there are a lot on my portfolio, so I'll have to look at it like one by one. We have a downward trend tonight. It's something that I have to look at. Okay, anyway, this is it for today, and I'll see you guys tomorrow, okay?